And you said you were a lonely bear. Well, people are crowding the cave of hibernation, I guess, right now. Yeah. Where do you think this is going to
go? For the next couple of weeks, I guess we will see a bit of a pause because the sell-off has been very steep. It's been one of the steepest in market history, and there has to be a bit of consolidation. But I think at the end of the day, one has to ask oneself, what triggered this sell-off? I mean, if you read the media, a lot of it has been focused on the so-called 2% adjustment, which has been also called devaluation. I take a different view. I think if you look at the July FOMC meeting, the minutes were released, the full minutes were only published on 19th of August. That's when the market started plunging. And I think it's because after the July FOMC meeting, the initial reaction was pretty dovish. People were saying, okay, fine, it's business as usual. Then when the minutes came out, then they realized that it's a bit more hawkish than what they expected, and that they have to pencil in at least a 25 basis points hike in September. That's when the market started. Of course, 2 days later, 3 days later, you have the currency move from the People's Bank of China. So that, I think, probably added on to a sudden realization among investors that, wait, this is not business as usual anymore.
But we saw June. I mean, come on, let's go back a bit. In June, when we saw that initial Shanghai kind of huge leg down, and then a bit of consolidation, and then this one, okay, these trouble comes in threes generally. So do we get consolidation and a further down leg? One part of my question. The other one is, you know, what caused it? Well, they're just too damn expensive, these stocks, ultimately. Yeah,
I mean, the rally in Shanghai doesn't really bug me, in the sense that it is still pretty much a contained stock market. It's not really open to foreigners yet. And the rally was, what, 9 months? It's like winning a lottery. You know, it's money that probably you shouldn't have in the first place. So the impact on the underlying Chinese economy, it's going to be very muted, very limited. If you talk about valuation, I'm concerned with American stocks. Apple, Google, Microsoft, Facebook, Amazon, 5 of them, before the sell-off, were valued at $2 trillion. 5 American companies is worth more than the entire Frankfurt stock market, which represents the 4th largest economy in the world.
Okay, but they're cash-rich, they're forward-thinking industries, and in this age of capitulation, this moment of capitulation, at least those still seem like safe haven plays. This is what led the rally yesterday. So perhaps there is value in these big name tech stocks.
So these 5 companies are worth more than the entire German economy. The Frankfurt stock market has global companies like Volkswagen, Bayer, Allianz, BMW, Continental, and so on and so forth. Right? Look. In '89, they said that the Imperial Palace in Tokyo is worth more than the state of California. Right. And we had a Nomura strategist from Tokyo in 1991 came down and gave a talk, and his outlook for the Nikkei index at that time was 80,000 points.
Okay, so then have markets reached fair value yet?
Oh, they've gone above fair value.
No, right now.
Currently.
Currently.
Are you saying that they're still looking expensive to you?
Oh yes, certainly. The real pain hasn't come in yet. I mean, look, my point is this, that the bull market in New York has been one of the longest, second longest, right? And what people have forgotten is that the US economic recovery is the longest post-World War II. It's already 76 months and counting. The average post-World War II is about 50-odd months. That's after World War II. If you take before World War II, the average US recovery is 38 months. And you have a central bank of the US that says that things are not normalized. I don't understand what normalized means, because your unemployment rate is 5.3%, your short-term unemployment rate, which is 26 weeks and below, and which is more important than the long-term unemployment rate in determining wages, is below 4%, which is a level that is similar to the level in the boom period of the 80s and the 90s. And you have a central bank that says, look, after 9 years, I still want to maintain zero interest rate. Right? Warren Buffett says interest rates are abnormally low. The converse of that is valuation are abnormally high. So I don't think a one-week sell-off is going to bring back valuation to, not even to fair value yet.